The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And we'll begin with the stock of the day, which is Super Retail. So the share price getting hammered today, down by close to 7%. It's put out a trading update saying that group revenue is expected to be 1% lower in the first half of FY26. CEO Paul Bradshaw says that an elevated level of promotional activity has negatively impacted margins. Super Retail posted record first half sales with group revenue to reach $2.2 billion for the 26 weeks to the end of December. Total sales up 4.2% overall, led by Macpac, while BCF underperformed from last year. Normalized before tax profit is expected to come in between $173 and $175 million, so that's below consensus. Stock of the day being Super Retail. I'll start with you, David Lane from Ord Minnett. The glory days over for Super Retail. Was this sort of the nail in the coffin?
I don't know whether it's the nail in the coffin. I think it's just a bit of a reality check that we had a reasonable period for retail sales that probably beat the expectations of many analysts. And in terms of Super Retail, they've had their own corporate governance issues. They've obviously had management changes there over the last 12 months as well. Their sales, as you mentioned, were higher, but they came at the expense of promotions. So their margins were hurt, particularly in Rebel and Macpac. So yes, higher sales, but at lower margins. And that's what the market has been negative about today. Shares down about 6.5% at the moment. I think medium and longer term Super Retail is reasonable value at current levels. They're on a PE ratio of 14 times. We're expecting that to decline to about 12 times next year because we are seeing some earnings growth coming from that business. A reasonable dividend yield of 4.7%. So we've got an accumulate recommendation on it. And it's one of those stocks that I think when you see some weakness like we're seeing in today's market, that might be a time to look at topping up the holding or putting that position into your portfolio.
Okay, so that's a buy.
Yeah.
Got it. Super Retail. In your view, Nathan, I cannot imagine that you're going to be looking pretty favorably on any retail stocks when you think that, there's dark clouds on the horizon and when we could also see a couple of interest rate hikes this year still.
Yeah. Interest rate hikes are implied. RBA hiking is another story. They will literally wait till they have no choice. So they probably won't hike for a while. But look, Super Retail is a really good business. I really like them. Management, I remember when I'm old enough. I remember when they bought Rebel and everyone said that was going to be a basket case and they absolutely murdered it. So you're not betting against them, but it's the cycle. It's not the first downgrade. It's the cycle. Even, the top, the three most favored retailers was probably Temple & Webster, Premier, Super Retail, and I'd say all three have pulled back. These are cyclical stocks. It's nothing to do with the operations. They can be good, but if the consumer is under pressure, they're under pressure. They're literally telling you that their revenue is doing okay because they were basically discounting. You have to discount to get people to spend. So that it's just showing you where we are. And I think unemployment goes up and consumer spending goes down. It's just bad for the sector. I'm staying out of retail. For me, Super Retail is a really good business, but it's a sell. It's been a sell for a while now. You have to remember, it's just pure cyclical stocks. So cyclical stocks, I know we fall in love with this great growth story, but these are classic cyclicals. You take your money, go somewhere else, and then you come back when the cyclical side is recovering. When economic growth is climbing, consumer spending is climbing, you want to be in these guys. It's not where it is right now. The reason we're talking about hikes is inflation, not because people are spending so much money. They're spending more money to get less stuff. So trust me, don't get me started on supermarkets and retail.
Yeah, all right, we'll leave that there.
So
look, you couldn't see it more differently from both of my guests. A buy from David Lane, Ords, and a sell from Nathan Somasundram from Deep Data Analytics. You'll have to Make up your own mind.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.